Assalamu alaikum, everyone. I hope you are doing well. Today is July 17th, Wednesday, and Bitcoin is 64,300. Tesla's at 249. Today, I'm going to talk about the Bitcoin miners, and we're going to try and make sense of some of its movement, see why it isn't really following Bitcoin's price that closely. So without further ado, let's get started. Really do appreciate the likes, so keep them coming. We've been hitting 100 likes every video consistently. I really appreciate that. As always, this is not financial advice, so be sure to do your own due diligence before making any investing decisions. So let's just take stock of where we are with the Bitcoin miner trade and whether or not our thesis for it in the beginning has panned out, because the argument for Bitcoin miners is that they may outperform Bitcoin during bull runs. Has this panned out or not? So the average miner right now, if you look, actually, average miner is not the right term. The average miner return, if you look at that and you compare it to Bitcoin, then the average miner return has really outpaced Bitcoin's return, regardless of timelines, so long as you're looking at 12 months, 6 months, 3 months, 2 months, or 1 month. So anything less than 12 months, and the average return for Bitcoin miners has been superior to Bitcoin's return. So if you look at the average miner return over the last 12 months, now this has been updated on July 10th, so it does differ a bit. Where today we're July 17th. So it's a week outdated. But if you look at the, and by the way, this is from Ecoinometrics, which actually have some really good articles on Bitcoin. Highly recommend. But if you look at the 12 months return, it is 204% versus Bitcoin at 94%. Something like Iris Energy did 454% in the last 12 months versus Bitcoin's 94%. If you look at, for example, on a 2 months scale, 71% average return for Bitcoin miners versus minus 10%. Again, this was as of July 10th. So really, the Bitcoin miners have sort of had a life of their own that is somewhat separate to the price of Bitcoin. So oftentimes we'll find, when Bitcoin's price is going down, a lot of Bitcoin miners are doing really well. And conversely, when Bitcoin is recovering and the price of Bitcoin is doing much better, as we saw in the last week, a lot of miners are struggling. So what is going on here? The thesis for Bitcoin miners is that over time, the rewards for mining Bitcoin are actually going down. So every halving, they are cut in half. However, the revenue that these miners are generating should actually increase with time. And we've actually seen this. So whether it's after the second halving, third halving, fourth halving, there are spikes in miner revenue, despite that happen after the halving. And this is despite the drop in miner rewards. And so, and each time we're getting to higher highs in terms of Bitcoin miner revenue. So over time, as these companies generate more revenue, the idea is that they should become more valuable. However, if we look at the actual returns for these minor stocks and we compare them month to month with the change in the revenue that the miners actually generate, we see that there is a correlation, but it's not a tight correlation. So a tight correlation would have all these dots much closer to the diagonal line across this graph. So this graph shows average return of minor stocks on the x-axis and the change in revenue from the previous months on the y-axis. If there was perfect correlation, then these orange dots would be closer to the diagonal line. But really, we see them very much dispersed. There is a a soft correlation, but it's not really that tight. What we can understand from this is that fund flows from investors are not necessarily, and this is ultimately what's going to determine the price of a stock, is how many investors are trying to buy it at any given time. This is not necessarily um, tightly correlated with the price of Bitcoin. The argument for Bitcoin miners is that they may outperform Bitcoin because as the price of Bitcoin goes up, the um, operating profit for these Bitcoin miners should go up by a larger percentage. And demand for this, recognition for this, may actually come after a jump in um, the price of Bitcoin. It may come after a drop in the price of Bitcoin because anticipation for a pump may build after a drop. So it's really about the future price movements, the anticipated future price movements of Bitcoin, as opposed to where Bitcoin has already been. And so this is one sort of piece to the puzzle as when it comes to understanding the price movement of Bitcoin miners. Now, the other piece of the puzzle is something that's becoming more and more clear, and it's unique to this particular Bitcoin cycle, which is the data center play. So just today, we heard that Cipher Mining was considering a sale of its operations. And this explains why Cipher has been up, close to 50% over the last week. I obviously received a lot of questions. Why is Cipher Mining doing as well as it is? And it turns out that, well, there was something going on behind the scenes. There was talk about a potential sale, and Cipher Mining is actually considering this sale. Um, and so we saw this play out previously with Core Scientific, and perhaps we're going to see this a lot more in the near future, wherein Bitcoin miners are being bought not necessarily for their Bitcoin mining capabilities, but rather for their access to power and the infrastructure that they have that can be used in the way of high performance computing and data center fulfillment. So so the more in tune a Bitcoin miner is to the data center opportunity, the high performance computing opportunity, it is likely that the better it will do, the more interest from investors it is going to get. And even Northern Data, so this is not a isolated case with regards to the interest in data centers from Bitcoin miners. So Bitcoin miner Northern Data, which is actually the largest Bitcoin miner in Europe, recently announced that they would be raising $233 million in additional capital in order to invest in NVIDIA GPUs and data center infrastructure. So this is going to be a common theme. And to the extent, as I mentioned, Bitcoin miners recognize this and invest in it, I think you're going to see funds flowing in their direction. So when it comes to Bitcoin miners and picking the ones that you think are going to be winners, this is a big part, I think, of the decision making process. And so, investor interest is what's going to drive price even more than necessarily, Bitcoin's price on just an objective basis. So you want to be focusing on, because we all know Bitcoin. I mean, I think the strong likelihood Bitcoin is going to go up in price, perhaps to 100,000 by the end of this year, perhaps even more. So we all already know that, but the um, uh, the, the variable in this equation, the X factor, is how much can these Bitcoin miners utilize the infrastructure they already have, the access to power they already have, for this additional play, which is data centers and high performance compute. Now, as it relates to Bitcoin and sort of excitement over Bitcoin and the robustness of its price moves, you can see that Bitcoin ETFs have recovered recently. So we had the largest single day BTC ETF inflow since June 5th, yesterday, with over 400 million inflows into the recently launched Bitcoin ETFs. And with regards to investors kind of being very um, eager to get exposure to Bitcoin in a leveraged way through Bitcoin miners, I think one telltale sign that perhaps there's going to be a big influx of capital into these Bitcoin miners is where do we think the RSI is headed? So, if we think the RSI is headed higher, so it becomes overbought, then these alternative exposure instruments like Bitcoin miners are going to likely follow in these overbought territory for Bitcoin. And Bitcoin RSI right now is in neutral territory. So despite the jump that we've seen, we went from in the 50s to 65,000 in Bitcoin's price. RSI is still neutral. Now, if you look at this chart and think, okay, we're going to overbought territory soon, then it's likely that Bitcoin miners having, being an alternative method to gain exposure to Bitcoin will likely run as well. So hopefully that adds some color to Bitcoin miners and understanding, why they are moving in the way they are moving, which is often counterintuitive. If you'd like to follow our portfolios, be sure to become a PIF member. With that, let's go to questions. Salam Rakan, wa alaikum salam Rashad. How do you determine that the rotation to low caps is near ending? Well, I think it's important to look at the relative valuations. And I think that so long as inflation and interest rates are top of mind for the market, then I think small caps will outperform. However, when the focus of the market goes from interest rates and inflation, when it goes from that to earnings and the health of the economy, that's when I think you want to focus on profitability. So when when the economy is strong or relatively strong, uh, then you want to focus, and we think that liquidity is on its way, then prioritizing growth, I think, is a good strategy. However, when we anticipate a recession or we're in a recession, then prioritizing profitability, I think, is the way to go. So, um, right now, I think that small caps still have a lot of room to run. It still seems to be the case that earnings are coming in relatively strong and forecasts for earnings are relatively robust. It still seems to be the case that a recession, if it happens, will be a mild one, and that interest rates are likely to come down in the coming period, and therefore prioritizing growth, which smaller caps do excel at, I think is the right strategy for this particular period in the market cycle. Amir Ali asks, Assalamu alaikum, Arkan. Great video as always. Thank you. Wa alaikum salam. Glad to be part of the PIF community. What's the thesis for taking profits from Tesla, which is a long term hold, only to buy it again and average up? So I think that for now we're holding Tesla into earnings. I think earnings will be strong. I think we may have our run up prior to earnings or after earnings. Um, But at which point, I think depending on what we hear during earnings and how what we hear about the upcoming robotaxi event, we may take profits. So had the robotaxi event remained on August 8th as initially scheduled, my plan was to sort of buy the rumor, sell the news. uh, Wherein, if we got a run up prior to the August 8th event, yeah, I was going to shave some of my position and then buy after the August 8th event. Now that it's been pushed out, depending on how much it has been pushed out and what the stock price movement is after earnings, uh, we'll see whether we shave some and take some profits or not. Nevertheless, Tesla remains, regardless, Tesla remains a long-term hold for us. So it's not really something that's keeping me up at night. If the opportunity presents itself, we'll do a swing trade. But if it doesn't and it's not obvious enough, then we're fine with just holding. So with that, guys, do leave a like. I really appreciate it. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.